Yeah, so I hope we are somewhere. We've learned something. Tell me something. I think people can now unmute and maybe give a reaction on what we have gone through. Yes, we are learning. Yes, thank you very much. Thank you very much. So let me share my my screen right now, so I'll share screen too. All right. So my screen is this side of the town. So I don't know whether I can take my camera to that side of town. So that I don't have to be turning my head. Okay. Right. So here we are. Okay. Okay. All right. So you guys, tell me whether you can see my screen, which has hourglass to the right and trading view to the left, and this currency strength meter at the bottom left. If you are able to see that, kindly let me know. Sharon Karua, that is yes. Type in 111 so that I know that you are seeing the screen that I'm talking about. You can? Oh yeah, thank you. Yeah, so basically this is basically how I trade. But today I just wanted us to learn just a few things about the trading itself. Okay, and let me put this one to fill the whole screen. Okay. All right. So you guys, you can see. You can see this is AUD NZD. Okay, the chart of AUD NZD. This is a 5-minute chart. All right, and down here we have I have the the RSI. How many of you are familiar, okay, with charts basically, okay? Because I also don't want to leave anyone, or especially on this part of the training. I'll leave that one there. So are we all fine with charts, candlesticks, and all that kind of thing? This kind of stuff. Let me just blow it up kidogo so that you can see the charts properly. Okay, so this is a 5-minute chart, meaning that each one of these candles is 5 minutes. All right, it takes 5 minutes for this candle to form. Okay. Let me just get where is the business? Okay, let me ask. Oh, Sue, I'm not. Okay. Okay. I don't know whether to go into the basics of a chart. No, let me leave that one to the IAM Academy. Make sure that you read, at least you go through your IAM Academy basics. Okay, please. In fact, because if I have to go back and define what a chart is and so on, you remember we can be here 2 days and we will not achieve much. All right. So you can do us a favor. Okay. We have basic training on Mondays. Please make sure that you also attend our basic trainings on Monday. Number 2, also make sure that you are finished your series 100, your series 200 and series 300. It will not take you more than 2 days to finish those particular lessons. Kindly, please, I really beg with you, make sure you clear those ones, because some of the things that we mentioned here, we assume that you already know those things, all right? But basically, if I could just tell you the type of, there is a line chart. And a line chart is basically plotting the price which is on the right here. You can see prices here on the right of the AUD NZD against time, over time. So you can imagine that every 5 minutes a dot is placed on the chart here where the price is. Every time, every 5 minutes a dot is placed. Every 5 minutes a dot is placed. Every 5 minutes a dot is placed at the close of the price every 5 minutes. And then those particular points are joined by a single line. So this is actually how the price came. The price came down over time, okay, and this is time at the bottom here. At the bottom here, you can see the time is changing and so on. So the price came down, then went up, then came down a bit, and then went up, and then from there it started coming down, then coming down, and then coming down, then went sideways, and so on. Okay. Now, what is important with this particular chart that I just want to mention? Okay, from a line chart, normally you upgrade, you go to what is called a bar chart. And a bar chart basically means that within the 5 minutes that this particular line was being plotted, it gives you more information that the price actually came as low as here and went as high as there and exited there within that particular time. So that's what a bar chart is, all right? So it gives you more information than just a line chart, all right? It gives you more information of what happened within the 5 minutes, okay? Within the 5 minutes. Now, a modified version of a bar chart is now the candlestick, the candlestick, all right? Now, the candlestick is the same bar chart, but now in between where the prices are opened and closed is filled up either by a green color or by a red color, but these colors are also user defined, meaning that you can define your own colors, okay? You can make them blue, you can make them white, you can make them whatever you want, all right? But just so that you are able to identify when was the price going up and when was the price going down, you use different colors. So when it is red, the prices were coming down. When it is green, the prices were going up. So that's basically what a candlestick shows. Then you have these things called wicks. These lines above the body and below the body. Just like the way in a candle we have a wick which burns. So that is the wick, all right? And basically what a wick is where the price went as far as within that 5 minutes, depending on whether this is a 5 minute chart, okay, and the time is normally defined here. So if I go to a 15-minute chart, for example, this is now a 15-minute chart. It's different from the 5-minute chart, but now it has more information because one candle is 15 minutes, all right? And a 15-minute candle will have 3 5-minute candles inside that particular candle. So if you want to dissect what happened inside this particular candle, you can go to 5 minutes or even 3 minutes, because now 3 minutes will have how many candles within a 15-minute candle? It will have 5 of them, all right? All right, so 5 of these candles make a 15-minute candle. All right, so basically that's about candles and all that. Now, I don't meeting sharing all groups. Oh, okay, all right. Thank you, Susan. Okay, so so to be able to trade the binary, we normally go to very small time frames, okay? We normally go to very small time frames. Now, you need to be able to recognize the three different phases of a market. The three phases of a market are the following. Let me get a text here and write them down here. And write them down here. We have what we call consolidation. We have expansion. Then we have trending. All right. So I hope most of you know. Okay. All right. So yeah, I've muted. Okay, because people are in different settings. So make sure that if you are in a place where it is noisy, always keep your mics muted. So I hope you guys know about these three different phases of a market. For example, this area here. Okay, let me get this whatever here. This area here is referred to as a consolidation area. Okay, why is it a consolidation area? Because the price keeps on just oscillating between two different places. All right, it is going up here and coming back down here and so on. All right. And you can identify different other places that that happens. All right, here, okay, that's also another area of consolidation. All right, then you also have an expansion area. Okay, let me get that to show you an expansion area. It can be large or small. Okay. This is an area where the market is expanding, all right? And basically what we mean by expanding is that it is now unable to decide which direction to take. So it is moving in one direction and coming back and going in the opposite direction and so on and so forth, okay? You can also refer to a place like here, as also an expansion, all right? Because it broke out of this consolidation phase and started to expand. So you need to be able to identify these particular areas here. Now, how to be able to identify that? You now use what we call an oscillator, all right? You use an oscillator. Let me see if I can get that going. So you use an oscillator, and one of different oscillators can, that is the work of an oscillator, all right? I know we can use oscillators to do many other things, but in trading, one of the most powerful oscillators that can actually identify for you when a market is in a particular version is the RSI. Okay. Now, what is an oscillator? An oscillator is an indicator that has a specific range of its movement. It moves. For example, I think the MACD is an oscillator that that ranges from one, I think from 1 to -1, okay? I think something like that, from 1 to -1, and it oscillates around 0, okay? I think so. Maybe the master traders here can tell me. I don't know whether is it from 1 to -1 or something like that. Okay. The RSI oscillates from 0 to 100 and back. It cannot go beyond 100. Even however high the price goes, even if the price goes from hell to heaven, it will never go beyond 100. Okay. And even if it comes from heaven to hell, towards it can never go below 0. All right. So it can go down and just remain down, but it can never go beyond there. That is why sometimes the problem with an oscillator sometimes is that it can tell you that the market is overbought or oversold, and it is still buying when it is overbought, and it is still selling when it is saying it's already oversold. All right. So you don't know why is the market still going while the RSI is no longer having any space to go. So that is the problem with an oscillator, because the oscillator only oscillates between a particular range. Okay. So an oscillator is supposed to give you only certain information that will guide you to identify which particular market are you dealing with. Are you dealing with a consolidation? Then you trade in a consolidated manner. When it is an expansion, you trade as in an expansion manner. When it is trending, you trade as in an expanded manner. And so what will give you that particular information is the RSI, okay? Or even the MACD. The MACD still gives you that particular information, all right? Trending, I have not identified trending. By the way, this is trending, okay? When it came from up here, down, all the way up to here, that was trending, all right? Let me just pull this. Let me see where it came from. Yeah, from up here all the way down here, the market was trending. Let me identify that one for you. So trending, this is this is trending. So, okay. So this is trending. Let me just get that, write that one here. If you guys are taking notes, so this is trending. So this one was consolidation. Now, why am I telling you all these things? I'm telling you all these things so that you are able to choose the style of how you trade in any one of these areas, okay? So this one we had said was, this one we had said was expansion. Okay. Right, let me put it. This is expansion. We had also said that this is also an expansion, so I can clone. So this is also an expansion, and so on. And if I minimize this kidogo, this is also an expansion. Sorry, consolidation. Clone. Now there is another aspect that I need to add here. Just for your information, there is a breakout. Okay, there is a breakout. Now this is a breakout. Okay, let me get that one going. So that is a breakout. When the market decides to move out of its current location and to move to another place, to relocate, okay, to relocate from where it is to another location, that is called a breakout. All right, that is called a breakout. And there is also ways in which you need to learn how to trade a breakout. All right, breakouts are very powerful ways of being able to trade. So this is a breakout. Let me get that one written here. A breakout. Okay, so when you know these particular types of how the market is behaving, all right, how the market is behaving, then you trade very, then you can manage the market very well. Now, the market trends most, the market consolidates most of the time, okay, and also trends most of the time. It breaks out 10% of the time. Very, very little time does it break out, okay? And before breakout, there is normally what is called an expansion, okay? So the market will expand before breaking out of that level, okay? And so on and so forth. So I think it's also very important to know that. And sometimes the market can expand in the opposite direction of where it will break out to, okay? And that is how banks normally beat retail traders, because a retail trader, when they see the market moving in a particular way, they think it's a breakout in that particular direction. And when you apply the rules on how to trade breakout in that direction, the market changes direction and moves in the opposite direction, okay? And you can see that here, although this one, it broke out of this level and started trending on this particular area before coming back to consolidate around here, and so on. So this is important to learn how to be able to manage how you trade in the market. So the tool that you use to be able to help you in trading is, if you are trading any one of these, and normally in binary trading, we tend to trade consolidation better. Trading a consolidation area is the best for binary trading, because it's very easy to sell up here, come and buy down here, sell up here, buy down here, sell up here, and so on and so forth, okay? You guys are following that? So trading the consolidation is a very powerful thing that you need to do. Now, I need to erase the things that I have on the screen. Whatever. So probably take a screenshot if you want to take a screenshot of this, because I want to delete this, to delete everything that I have on the that I've drawn here, to be able to draw something else. All right. Okay. I've deleted. Sorry. Okay. So now, let me mention some of the things. Now, for you to be trade HFX, the best method that we normally trade HFX is being able to spot when the market is changing direction. When the market is changing direction, all right? Let me mention it here. In HFX, we trade when market changes direction. If we can know when the market changes direction, then we will make money. If we can identify these spots, Let me just see whether I can. I'm talking about this. Let me get the pen to write better. Oh, here it is. I want it to be red, and I want it to be very thick so that you guys can see. Okay. So I can delete that one. Then I draw another one. All right. So we need to be able to identify these places where the market is turning. Okay. So how can we know these areas that the market is turning? Because if we can be magicians and actually know these areas where the market is turning, then we will make lots of money in high frequency trading. Because when the market reaches here, we do a buy and we win. When the market reaches here, we do a put and we win. When the market reaches here, we do a buy and we win, and so on and so forth and so on. So we need to know when the market is turning. So how do we know that? All right. And I want now people to type in on the chat, how do we know when market is turning? All right. So tell me. Type on the chat. How do we know? You've been to series 100, 200, 300, 400. How do we know when the market is turning? We have now known that the use of RSI and the MACD is to be able to predict when the market is in consolidation, all right? When the market is in expansion, and when the market, oh, by the way, did I mention that? When the market is above, when RSI is above 40, it's in either trending or in an expansion or in a breakout, all right, when it's above 40. When it's in between, it is in consolidation, like here, all right? That is important. I think I needed to mention that. Guys, the lesson that I missed in the previous one, and probably I'll do a PDF that will do all this that I'm teaching today just by word of mouth here. I don't know whether I can mention that here. I can draw that one here. So this one, this area here, we said was consolidation. Notice, and probably if I do the color here different, let me put it like that. Feel this. Okay, that one there. And this area here. So we say that we can identify this consolidation area when the RSI is between 60 and 40. When the market is this RSI is between 40 and 60, the RSI will help us to do that. Now, when the market goes below 40, okay, like here, it is in either trending or in an expansion, okay, and it is moving away from the center. It is not turning very, very soon. And here you may not know exactly when it will turn, and so on. Okay, so you will have to use different tools. You will have to use different tools to discover why the market is turning or when the market will turn at this point. All right. So, very good. I think today I will do the training a little bit longer. I don't know whether you guys are okay with it. We can use the RSI or identify candle patterns. Yes, yeah. Oh, by the way, everything that I'm mentioning here, you can use different methods. Okay, I'm just showing you one of them. this is not the only way to identify whether consolidation or whatever it is. You can use many of them. But the way I use and the way I have learned from the platform, okay, or I learned from other people, RSI can help you to identify the phases of the phases of the market, whether it is in trending phase, whether it is in consolidation phase, or whether it is an expansion space, or whether it is in a trending phase. Okay. Now, the other thing that you can use to know when the market will turn is the MACD, okay, in what is called divergence. But before we do that, Bollinger Bands, yes, very powerful, very powerful. Kamukama Innocent, yeah. The Bollinger Band is a very powerful tool that will help you to identify when the market is going to turn. Okay, the only challenge with the Bollinger Band, of course, is also like the challenge we have with the oscillators. The price can continually hack on the Bollinger Band for a very long time. And so you never know when will it stop and turn. Although it has hit the Bollinger Band, it is still going along the Bollinger Band. I don't know whether some of you have experienced that. You think the market is about to turn because it has hit the Bollinger Band, but it continues. It continues to slide along the Bollinger Band for a very long time. So when that is happening, you look at the RSI. If the RSI is telling you it's below 40 or above, it's below 40 or above 60, then that is why it is going up along the Bollinger Band. All right, why the price is continuing to go along the Bollinger Band. So you need now to look at other things like divergence and so on. But I wanted to mention the traditional ways in which we normally note the turning point, and there is something called SRT. How many of you know what an SRT is? Okay. S stands for SRTs. This is a common thing that we know in trading. Okay, SRTs: support and resistance. Thank you, Douglas Bega, for writing it on the chat. Yes. So these are the things that you use to know that the market is going to turn at this point or at that point or whatever it is. So you use support or resistance or a trend line. All right. And I believe that some of you now know how to draw support, resistance, and trend lines. All right. If you have been to Lillian's training, she does a lot of these SRTs. Okay. These are the most powerful. And by the way, this is now where you now know how to trade HFX. When you want to trade HFX effectively, you must be able to use SRTs. But now you use SRTs on a shorter time frame. Mind you, remember, we are on a 3-minute candle pattern here. This is a 3-minute candle pattern. In fact, you can actually go down to a 1-minute chart. All right. And it is still the same. In fact, the places that I've just marked are exactly the same, even when you're on a 1-minute chart. So you can still use the same things that we are talking about. All right. So SRTs are the most powerful things. Now, there is something else that I need to mention, and that's what I learned also today. Not today, but an addition to these SRTs. It is what is called quarter Quarter theory. Quarter theory levels. Quarter theory levels, all right? This is also, especially this is how banks trade. How many of you what quarter theory level is? Quarter theory levels are. And by the way, this is Forex trading 101. If you want to trade Forex with this particular knowledge that I'm giving right now, you only need to go to a 4-hour daily 4-hour and 1 hour. And voila, you are using the same things that we are using on a 1-minute chart. Guys, you can see that where we've been analyzing was only this part. But when you want to trade Forex, because you want to get all these huge pips that are being pumped by the market over a longer period of time, you use the same strategy, and you make the same money. All right? So in HFX, we only narrow to a very small area and we bang in the money at that particular point. All right? I hope you guys are getting it on this training, that you can still use this same information. So if you are a good Forex trader, then you are already a very good HFX trader. You only need to go to a smaller time frame, and that's it, and you make the money. All right, using the same strategy that we are talking about. All right. So quarter theory levels also help you to identify when to trade and when to buy and when to sell. Now I have finished the lesson. The remaining part of what I want to show you is just some charts that I have that I've done just for you to see how they are operationalized in real time. Okay. Now this is my Euro USD. This is my Euro USD chart for trading HFX. All right. And I oscillate between, okay, so the market was here when I drew these lines and so on. And now I need to maybe just update it a little bit. But just to summarize everything that I've been talking about. So I have an indicator here called the Evans Evan Capral 2. Okay, so this indicator is the Bollinger Band, and remember Bollinger Band is one of the very powerful tools to be able to identify turning points in the market. But it's not the only one, because look at this. This is exactly what I was mentioning to you guys. All right, that the price can decide to hug the Bollinger Band and continue hugging it for a very long time. And if you are here trying to sell at now, because it has touched the Bollinger Band, it's about to turn, you are trying to sell, you will lose so much money here, you will cry. Okay, you will actually blow your account. Only at this level here, between here and here, your account will blow. All right, and that's within a very short time. So to be able to avoid this selling, you look at the RSI. What is RSI saying? Over this period of time, let me just tell you, and this is live chart. This is the current euro dollar chart. This is the current euro dollar chart. So look at this. Look at that level and look at the RSI, what it is saying. The RSI is above 60. All right. Okay. All right. The RSI is above 60. It's above 60, and that is why it is flying through the whatever. So you can apply at this point. you can apply breakout strategy. Okay, so what does breakout strategy mean? It means that when it has broken out of this level, it will go to the next level and the next level and so on. So you just buy instead of selling, all right? Although it is along the Bollinger Band, all right? Otherwise, normally, when it hits the Bollinger Band, you are supposed to sell. When it hits, you are supposed to be looking for buys and sells, all right? Then the other thing that I need you to mention, to look at very keenly here is I have drawn the quarter theory levels here on this chart. All right, I've drawn those quarter theory levels here. And by the way, it's not difficult, guys, to draw these lines. You just look at a reasonable level between one to another, and normally the big lines are even numbers. So you can see this one here is 1.17600. That's an even number. This is 1.17400. This is 1.17200. This is 1.70000, and so on. This is 1.8200. This is 1.18400. Then you can subdivide the in between. Okay, so this one will become halfway in between that and this. Now you will find that the market will tend to turn on those particular levels. So you now have the RSI, you have the MACD, which also gives you direction. It gives you also the momentum and so on and so forth. And then you have this particular, the Bollinger Band and so on that is able to give you turning points and all that. So when all those, all right, when all those, when you have several, indicators telling you what to do, now you can see why your win rate should approach 80 to 90%. And that's what you need to succeed in trading HFX. Now, the training, I think, has taken a bit of time, but I think if you internalize what I've said, and drawing these lines, by the way, is one off. You draw it once, and that's it. You trade it for the whole of that session. All right. So you can draw your lines, and tomorrow you will still find those lines. So you'll only add the ones on top, add the ones below, and so forth and so on. So don't think that this is a lot of work. It is not a lot of work. Losing money is a lot of work. Guys, losing money is a lot of work. Drawing lines is not a lot of work. All right. And for me, trend lines is not difficult to see. Okay. You can actually see here. This is basically almost a straight trend line. By the way, let me just draw a line here, there for you guys just to see a trend line as is. Sorry, there is that here. Okay, let me just draw you a trend line. Where's my trend line? I think this is the one. So here, that is a trend line. I don't know whether I need to change the color here to something else. Let me see. Let me change it to this. Let me change it to a thicker line. Okay. So how many of you can see my green line? Type 111 when you can see a trend line. Yeah, so that's a trend line. Okay. So guys, how many things have you now learned that can help you determine where the market will turn? Will it be difficult now for you to know when the market will turn? You only now need to operationalize that information. You only need to operationalize that information. That is it. There is no secret. There is no other secret to trading other than what I've described right now. That is trading 101. Trading 101. And you transform this to a larger time frame, and voila, you are a master trader making money in the market. Guys, this is as simple as it can get. This is as simple as it can get. All right? No other secret. There are no other secret weapons. There is nothing else that people do other than just. So when you get confluence in all these things that we have talked about, you are in the money. Now, the hourglass. So this is how I trade. Let me just show you guys. Sometimes it is important also to have a confluence between two time frames, several time frames. Okay, guys, my first time to attend, but have picked a million knowledge. Kamukama, innocent, thank you. By the way, the only way I can be interacting with you guys is if you can be interacting with me on the chat. I don't know whether I'm delivering value or nothing. So please keep on typing something on the chat. It will keep me know that I'm giving you, I'm saying something that is making sense on the other side of the aisle. All right. So where does the hourglass come in? Where does the hourglass come in? So for me, the hourglass comes in just for more confluence, of what I need to do. So let me just see whether I can get in the euro dollar here. I don't know whether it's still on or I need to log in. Yes. I think this is it. This is it. Because this is 5 minutes. If I put it in 5 minutes. All right. So it's the same, isn't it? This is the same as this on a 5 minutes. So when I go to 1 minute, so that is how it looks in a 1 minute, in a 1 minute time frame. So it's the same actually. So so now you can see what the hourglass is telling you. It's telling you that it is turning from here coming down. All right, it has predicted this. But the only thing that you need to know about this hourglass, and why I like to use both, is because the hourglass is on a 5 minute chart. In a 5 minute chart. So again, there is an important thing that you need to have when you use two different time frames. Okay. In fact, when you trade with Evan Capral, he uses 5 minutes and either 2 minutes or 3 minutes concurrently on his screen. Okay. If you are on the paid version of TradingView, you can actually split your screen into two and have two time frames on the same currency. So for me to achieve the same effect, I get the hourglass, which is on a 5 minute, and I superimpose it, and I have mine, which is on a 1 minute. Now, the 1 minute will give me the more precise point to be able to trade. Okay, like right now, I can wait for this particular candle to come maybe up to some level here that I need, and then I can be able to sell it. All right. Now, the beauty about also the Bollinger Band and whatever here, it also has its other resistance levels and support levels. Okay, this particular indicator. Let me do something here. Let me remove the chart. How many of you can see the indicator without the candle? Let me go back here. All right, I have removed that's the price. Okay, I want you to see the indicator alone. All right, so this is the indicator. It has the Bollinger Band, a double Bollinger Band. Basically, this two double is made double because the parameters are different. Okay, if you actually check those parameters here, input, I think it is 2.5, and something else. So the parameters are just the ones that make the Bollinger Band to be 2 on top and to be 2 below, okay? But do you see these other lines here, the red, the red, the red? Those are resistance in the last 30 minutes. This is the highest place, the highest price reached within that 30 minutes. And this is the lowest price it reached within that 30 minutes. So it plots support and resistance that can also help you to make decisions on when the price reaches around that level, whether it will react and so on. So I think we may not have time to trade today, but I think that information that I've shared, I think is good for the night, good for the evening. It's powerful information, I think, that you can also apply even on normal trading. You only need to change the time frame to a higher time frame and apply the same philosophy on how to trade and so on. Okay, so thank you so much. I think, guys, unless there is something else, I think I will call it a day. We will share when we can be able to do live trading together, when we can actually look for trades that we can actually trade. Let me see whether there is any that is readily available right now and so on. Yeah, so basically that's it, guys. I think I will then give maybe somebody to make a comment or two. Yes, somebody can make a comment or two about this training and so on, or whatever it is that probably we need to add in the coming days and so on, so that we can bring value to ourselves and so that we can be able to help each other succeed and make and excel in this area. So anybody with a comment before I call our master trader to close the meeting?
Thank you. Hi, JKK.
Hi, how are you, Koi?
Yeah, I'm fine. Thank you so much for this education. I have a question.
Yes, please.
Yeah, on the hourglass.
Yes.
The trade, they normally, the alerts which they are giving, it's at, the chart is at 5 minutes.
Yes.
So when I'm taking the trade on what is it called? When I'm taking the trade, I'm supposed to take it at what minute time frame?
Now that is a $1 million question. Not really.
Okay, when I want to execute the trade, I should set at how many minutes? 3 minutes, 5 minutes?
By the way, anything between 1 minute to 15 minutes can be done using the hourglass. So you can put your trade for 1 minute, you can put your trade for 3 minutes, you can put your trade for 15 minutes. I think that's the maximum on a 5 minute chart. It can, because no, let me, I've not completed my answer because it's not a simple answer as you are saying. I mean, as I've just described, it's more complicated than that. So when you are on a 5 minute and you are making predictions using 5 minutes, we normally recommend that the maximum time you can take is 3 times that candle. So 3 times 5 minutes is 15 minutes. All right. So if it gives you a prediction, take it within that period.
Within 15 minutes.
Yes, within 15 minutes. Of course, it can take longer, You can do rollover even up to 1 hour, 2 hours, but that prediction that it gave you on a 5 minutes should be within 15 minutes. But what is important, and that's why I was giving this training, is if you can see on your chart the confluences and where the market is likely to go, your SRTs on the chart itself can actually give you, just the way you normally do profit targets in normal forex trading. When normally you are saying you are buying at this point and you are taking your profit at this point because of the SRTs that you have applied on it, isn't it? Now, between that, where you are entering your trade and where you are going to take your profit, how long will the market take? For example, let me give you this. Let's just look at this briefly. If you are predicting that the market will move from here, let me just draw that. And thank you for that question. That's a very, I'm trying to look for the drawing. So here they are. Let's say you are predicting the market from here up to here. Okay. How long will it take you from here up to there? It takes how many candles of 1 minute? Approximately, whatever they are. They are probably half an hour, isn't it? So that means if you are taking a buy here and you had approximated that this is the time it will take to reach here, you put half an hour. You get what I'm saying? But sorry, let me. I'm still on a draw. Let me. How do you delete that? You press the delete button. Okay, sorry. There. So let's assume now you are predicting the market from here. Sorry, I have drawn a bad one. I delete that one. From here, okay, up to here. How many minutes is that? That is less than 10 minutes. But in binary, you only need to predict a higher price. So for me, I would only want to predict from here up to here. And that's only 3 minutes. Oh, sorry guys. I think my internet dropped. I thought my internet dropped. Okay, sorry. I'm very sorry about that. My internet dropped briefly. Now, I was describing between here and here. So for me, in fact, nowadays I take 2-minute trades, and then probably I'll roll it over. When I roll over 2 minutes, it becomes 4 minutes. When I roll over 4 minutes, it will become 8 minutes, all right? Which is normally the standard of rolling over. You roll over a maximum of 2 times, okay? So a 2 minute will eventually become 8 minutes if you roll over twice, all right? So if I predict from here going up, within 2 minutes, I'll have won the trade. So why should I wait for 5 minutes or 10 minutes for that particular trade while I can win my trade within 2 minutes? And no, that's me, okay? I'm not saying that that's what you should do. You should be able to learn or to predict how long are you waiting for your trade. Are you waiting from here up to there? Or are you waiting from there up to there? And how much are those minutes that you are waiting? Or for example, you may have entered your trade too early and the market is still moving in the opposite direction before turning. And so because of that particular curve, it will take longer time. So you might have to, that's why we roll over, because we have entered a little bit early and the market is yet to make the about turn to come back. So that's why we roll over for a longer period of time. So, so the danger, of course, with a shorter time frame is that, for example, let's assume you entered a trade here for a buy, okay? And then you have said 5 minutes. In 5 minutes, it has also come back and it's already below your entry. So you roll over again to another 5 minutes, which is 10 minutes, and you reach here and you win your trade. Otherwise, with the 5 minutes or maybe whatever it was here, you probably would have lost because it came below your trade. Kui, is that almost answering your question? So it's a little bit
yes.
It's a little bit tricky to just say this is what you do. But if you are trading using the hourglass, the way Matthew Thayer does it is that provided you have gotten the right entry, he normally takes 3 minutes for his trades. And if he rolls over 3 minutes, it will become 6 minutes. If he rolls over the second time, it will become 12 minutes. Again, you can see it is still within the 15 minutes range of over 15-minute candle, because we are saying for every candle, you can only predict up to 3 candles. So if you are on a 15-minute chart, you can do it up to 45 minutes, and so on and so forth. If you're on a 1-minute chart, you only predict for 1 minute, and so on. And anyway, yeah, so it's a bit tricky what you can say. I am the only one not seeing this screen. Yes, you are the only one not seeing this screen. Actually, you are not the only one. You are everyone else, because when I came back, I didn't share. I'm sorry, I didn't share, but now you can see. Sorry, I'm very sorry. By the way, the second half, were you guys able to see my screen? I hope you are able to. Okay. Now tell me, guys. Any other question that you guys could be having? I think the internet is trying to tell us that it's time up. So any question, guys, please ask another question. I think, Flora, you had a question? Flora had a question? Flora, you are still here? So any other question? If there's any other question you guys could be having? We will still repeat anyway some of these trainings and whatever. So anything that may not be clear today, we will still have time to have it cleared. We are not going anywhere until we are all millionaires. We are not going anywhere until we have all achieved our, how about RSI operating between 30 and 70? Now, when you are operating between 30 and 70 on the RSI, you will miss out on expansion. Okay, that's a very good question, by the way. Let me just clarify that. The RSI in binary should help you avoid this type of scenario here. All right, don't trade this reversal before it has really reached the level, the correct level. Okay, and you can only know that because the RSI is above 40. All right, otherwise, if you start selling here, you might lose most of your trades when the market slides along the Bollinger Band. So to help you avoid the slide along Bollinger Band, make sure you look at the RSI. Make sure you look at the RSI to make sure that it's between 40 and between 60 and 40, between 40 and 60. In normal currency trading, you may use 30-70 or 20-80. Especially 20-80 is the best for real reversals, complete reversals, okay? But for you to know when it is trending, when the market is beginning to trend, which is the most critical information that you need the RSI to give you, when the market is exploding out of a breakout or heavily trending, then this RS 40 and 60 is ideal. Okay, so that's good. Thank you very much, Kamukama Innocent, for that. I hope I have attended to it. So Lillian, just close the meeting. I think I don't want to answer another question. We will go up to tomorrow. Lillian, Miss Fierce.
Wow, awesome. Thank you so much, Jeremiah, for such an amazing training. I mean, I've learned quite a bit myself about, this HFX and binary and everything. I'm really excited to see where we're going to be going with it very soon. So asante sana. For those on the call, I mean, if you can just show our appreciation for our master HFX trader and Forex trader, Jeremiah. Let's just give him some 111. Let's just show him some appreciation so that, next week he'll be as excited again.
Thank you.
Got value. If you got value, guys, someone, just keep dropping them. And thank you so much, guys, for being the technical teacher, very good live and making real money with Mr. Kendago. So let's look forward to that.
Thank you so much, guys. Thank you.
Many of us are new to this HFX. So I just want to say that we will hold your hand, and Jeremiah is very good at that, to be able to walk you through this. But I'll also encourage you to go to the academy. Okay, just go to the academy, go through the content, so that next time when we come, we can spend more time, making
Trading.
money.
Yes, you need to
rather
trade
than going through, basics, which are in our Forex Academy 101 and 200 series and all that. So let's spend some time this week going through the content. And then also we have, the other, what are they called, HFX educators, the Matthew Stairs and whatnot. Start following them, guys. And yeah, but very soon we'll be making money in this market. So thank you, guys, and have a lovely evening. Once again, Jeremiah, asante sana.
Thank you. All right, good night. Good night.